So if you're still losing money, then today I'm going to share with you how you can build a profitable trading strategy yourself. And you gotta follow these 5 tips, and at the end I'm gonna give you a broker to consider to trade with. The first very important thing, and a lot of people are not willing to do this because it's not easy. The first thing is, it must be tested over a large sample size of trades. So the thing is, a lot of beginner traders, they trade probably for 1 to 2 weeks, and then they become profitable on a demo account, not a live account, and then they feel like, oh, you know what, my trading strategy is profitable and I can go live. Now, there's one problem with this. I don't care how many trades you have made in these 1-2 weeks testing your new strategy. It is not long enough. You could have made 100 trades, but it still doesn't really tell you whether the strategy will be profitable in the long run. Why is that? Even though you made a lot of trades, let's say you're a scalper, you made 100 trades in 2 weeks. Because the market goes through cycles, various different stages, ranging, trending, consolidating, basically accumulation, distribution phases, and then also go through periods of GDP growth and then GDP declining, different economic conditions. If you only open a lot of trades in 2 weeks, you've only put your trading system through a small phase of the economic cycle. So let's say, for example, you made 100 trades when the economy is going very well. Okay, these 2 weeks, you're just super lucky. But then what if in the next few months, the economy goes down, which is normal? So then, does your trading system work during those kind of market conditions? And then you wouldn't know. So it's not so much about the number of trades. Even though it is important, make sure you have at least 30 trades. Okay, make sure that you have the numbers. If you studied statistics, like me back then in finance school, you know that you need a large sample size to be able to determine whether the hypothesis is valid or not. If your sample size is only like 5, 10, then it's not really representative. So how long should you put your system to test? Later I'm going to share with you more about that. But for now, make sure you have a good sample size, at least 30 trades. But also, very important, you gotta understand this is the danger, okay? A lot of beginner traders, they think that the more I trade, then the more profitable I'll become. Now, if you know, you know, okay? If you're an experienced trader, you know that eventually you realize that, hey, you know what? The more I trade, the more I lose money. As you become more experienced, you realize that, okay, the less indicators, the better. The less currencies you trade, the better. Then it's not about making a lot of trades. Because a lot of beginner traders, they open a lot of trades. Some are low probability, some are medium probability, especially when they haven't been trading for a couple of days. Then they be like having a major identity crisis. What am I? Who am I? Where am I? When am I? It's like they just gotta trade all the time. Okay? You want to become a successful trader? Reduce your stress. Quality over quantity. If you don't believe me, go and learn it the hard way. I've made all the mistakes that you can think of under the sun. If you don't learn it the easy way, learn it the hard way. Okay, then the second tip, make sure that over this period of testing your new trading strategy, the ROI has to be positive. Of course, this is common sense, you already know it, but how long should you test it? Give it at least 6 months. Now, I have some beginner traders telling me, Karen, I've been testing for 3 months and I'm not profitable, I want to quit. And yet you are willing to spend 40 years in a 9-to-5 job. Think about that. So testing a strategy, a new strategy, is not just about making a lot of trades, okay, to accumulate a good sample size, but also putting that system through various market conditions, so that the next time when there's a volatile market, there's a ranging market, quiet market, you will know what to do because you have tested it in all kinds of situations. And also understand that when you test your strategy in demo, people told me, Karen, I've tested my strategy in demo and then I got 100% win rate. But then when I move to live, then it's a different story now. It can be due to many different reasons, but then first thing first, you gotta understand that no strategy has a 100% win rate. Even my strategy is like 50-60% win rate. on average for stocks and also forex. It's not about win rate. The best top billionaire hedge fund manager traders in the world, they win only about half of the time. So if somebody is telling you, I have a 100% win rate by my system, just block. If you have a good ROI, let's say 5 to 10% a month, that is reasonable. If you see people doing 100% a month, consistently 200% a month, they are probably risking their whole entire account to generate that 100% a month, 50% a day. It's not about returns, it's about risk-adjusted returns. How much are you risking to generate that percentage ROI? So speaking of risk, this comes down to the third point. That is the volatility of returns. So basically, you can measure volatility of your trading account by using this metric called beta. If you study in finance school, you come across this all the time. Beta, if you want your trading system to sustain in the long term, it's best to have a trading system that has a low volatility, because what this affects is your psychology. If every time you lose a trade, your drawdown is like 40%, 50%, now that's an issue. Because what this is going to affect is your trading psychology, and it's going to cause you to engage in revenge trading. It's going to cause you to become demoralized more easily. It's going to cause you to do stupid things when the volatility is so unstable. So if you have two traders, both are achieving, let's say, 20% ROI per year. Okay, just example. The first trader, trader A, every time she trades, she's risking 2% per trade. Okay, so every time when she loses 2% of her account. Then the other trader, trader B, when she trades, every time she loses money, then she's losing like 20% of her account. Then who do you think is going to last longer? If your trading strategy requires you to set a super wide stop loss, then you're gonna reduce the risk by decreasing a lot size. Then the fourth component, now this metric, a lot of beginners focus on this too much. Now this is important, but it's just one part of the pizza. You need another half to make your trading system profitable. Win rate is the first half of the pizza. Then the other half, risk to reward ratio. The problem is a lot of beginner retail traders, they focus on this only, win rate. They focus on win rate only. I realized that a lot of pro traders, they focus a lot on risk to reward ratio. So basically, you gotta understand that it is a trade-off, okay? The better your win rate, then you can afford to have a less desirable risk to reward ratio. But then the better your risk to reward ratio is, then you gotta pay the price of having a lower win rate. So that's why I always say that there's no perfect trading system, because you gotta understand your personality. Are you somebody who is able to sustain multiple small losses in order to wait for an eventual big profit gain? Or are you somebody who is easily discouraged by losses even though they are small? So if you're somebody who is easily demoralized by losses, then you're gonna find a trading system that has a higher win rate. But if you're somebody who is more patient, you're able to sustain temporary losses, then you can afford to adopt a trading system that has a better risk to reward ratio. The good thing about a trading system with high win rate is that it is easier psychologically to handle it. But the problem with way too many trading systems in the market right now, it involves taking a lot of small wins, okay, in an attempt to get high ROI, but then when the one loss comes, it wipes out all your winning trades. So like, what's the point? I've again tried such trading systems. It is an ego boost temporarily, but then when the loss comes, when you wake up on that one fine, beautiful day, that one trade wiped out all your past 2 to 3 months of hard work. Is that even worth it? I've even had a trading guru tell me, you just set your TP target at 20-30 pips, just take the profit fast. But then when it comes to stop loss, we don't put a stop loss. We don't put a stop loss, okay? Or we set the stop loss as wide, as far away as possible, so that the price wouldn't hit the stop loss. That system didn't end up very well. Like, you get 100 straight wins. Then when the one loss comes, the market keeps going down and down and down. It wiped out everything. So no matter your win rate, I would say that you're still gonna maintain a good risk to reward ratio. Okay, so this comes to the 5th point. Have a risk to reward ratio of at least 1:1. Okay, every time before you enter a trade, there are a lot of criteria. Okay, so let's say you looked at your fundamental criteria, intermarket analysis, sentiment analysis, technical analysis. You have done your research, and then you look at the chart, you look at the price action confirmation, but then you realize that, hey, you know what, the volatility and the stop loss level is causing the risk to reward to be not so desirable. Let's say you are entering at the price that is far away from the moving average. The risk to reward at that point in time is not that ideal, so you don't enter the trade. But when it comes to your trading system, try not to have a trading system where the TP target is always more narrow than your stop loss target. Because if your trading system is like, every time I trade, the TP is 10 pips, then the stop loss is 40 pips away, then that is a bad risk to reward ratio. Like, you might win a lot of times, you might win for a whole entire month with that system, and then it's like instant gratification. It's very ego boosting, but then when the loss comes, it will be super demoralizing for you, because you'll be like, how come I worked so hard, but then that one trade just wiped out all my past many trades of hard work. Okay, so this is the most important thing. Have a good balance between both. You cannot have a win rate that's too low, like 10%. Like, out of 10 trades, you only win one time. You might be profitable with that system, but for a lot of people, that will affect their psychology. Okay, so around a win rate of at least 45%, 50%, that is good enough. Of course, at the end of the day, make sure that it fits your personality. Okay, if you are somebody who likes to pursue instant gratification, then you can find a strategy that has a higher win rate, but then that would mean that you would have to compromise on your risk to reward ratio. Okay, now of course, having a profitable system is good, but then if your broker is here to make you broker, then nothing is going to change. Okay, so if you want a broker recommendation, you can consider this broker called 8cap, and they offer a wide range of trading instruments from forex, stocks, to commodities and cryptocurrencies, and they also have competitive low spreads. So this means that you get to keep more of your profits. And 8cap is also fully regulated so that your funds are safe, and they are also awarded with good customer service. So if you have any issues with your trading, you can always approach them. And if you're familiar with the typical trading platforms, you can also trade with them under MetaTrader 4, MetaTrader 5. And they also have a lot of excellent educational resources, market analysis, and webinars to keep you informed and stay ahead of your trading game. And also, once in a while, they also organize trading competitions that you can join. So if you want to follow my path, like me, last time I joined a trading competition in Singapore. It's not organized by 8cap, but it's another broker, where I managed to rank number 1 in the whole entire of Singapore. Joining competitions can train you to handle pressure, but those trading competitions are optional, so you can decide whether you want to join or not. So if you want to sign up for this broker, I'll put link down in the description below so you can check it out. And the good thing is that over the years, they also have won a lot of awards, and they also organize a lot of virtual trading conferences, all completely free. So most importantly, for your trading system to really work in the long term, the most important thing is be patient. No profitable, good trading system is built within 1 week, 1 month. To be safe, give it 1 year. Just test it. The more you rush, the faster you're going to lose money. And remember, you don't need a perfect trading system, 100% win rate, no loss trading system to make money in the long term. You can have an imperfect trading system, but as long as you apply good discipline, strong discipline, good risk management, strong trading psychology, you can make an imperfect trading system work in the long term. Okay, so stop chasing the perfect holy grail indicator that doesn't exist. Okay, so with that, I'll talk to you in the next video. Bye.